Good day, fellow investors. How to invest with and for inflation in 2023. There was a great comment by Emilian. So, how to take advantage of high inflation environment in the stock market. This cycle is not the first time. So, what to add, what to focus in existing portfolio in the long-term perspective. He's trying to add some companies, but in this decline, I see a lot of option to lower my average price. Is this fine, or focus on something else now should have more benefit? Likely, should I focus on asset classes? And we'll also discuss gold. But when it comes to inflation, I think the most important thing is strategy when it comes to investing, mindset when it comes to inflation, and we'll also discuss one stock to see how inflation impacts stock market investing. The first question you have to ask yourself is, how expensive is it to protect yourself now against inflation? Because I was telling since I started this YouTube channel, this is 2018, so inflation, how to make money with inflation, how to take advantage of inflation, how to protect yourself from inflation. Even in the summary of the Intelligent Investor, it's always a topic, but here everything was much cheaper to protect yourself. Now it is unfortunately more expensive. Great way to protect yourself from inflation is a 30-year fixed rate mortgage. Now it is 6%. It was 2%, 3% just a while ago, and that's an insane difference in costs. If you buy a house for $500,000 now, you have to pay $3,500 in monthly payments for 30 years. Just a year ago, 2 years ago, that was almost half the price. That's insane. So, of course, protecting yourself now against the inflation with leverage costs more. Depends where you live. Somewhere you can still get those cheap loans, and if you can do that, a friend of mine just got a fixed loan for 2.3%, a lot of money. So that's insane. If you can still take advantage of that, well, check your situation. But still, we are here now and we want to do investing. And when it comes to protecting yourself from inflation, the key is to do good investing. And that means that you invest well no matter what happens next. If there is inflation, if there isn't inflation, you have to do okay. That's the key. If you look at real estate, you see, okay, what is my mortgage payment? What's my rent now? Does it pay to own that house over 30 years or not? If it does pay for similar payments, of course you go for the mortgage because it saves you money over the long term. Just calculate things, because inflation investing is good investing. And I said I will mention gold, and some people say, oh, go into gold to protect yourself against inflation. Just go back 10-15 years and remember the financial crisis. Everyone was saying, oh, inflation, gold, they're printing so much money. Yes, gold nearly touched 2000, and then it was nearly touching 1000 just a little bit later. So it's extremely important to understand when to protect yourself against inflation, because here nobody thought about inflation, and then it was a good protection. But here, when everyone thinks about it, it's usually more risky, and that's the issue there. Plus, gold doesn't pay any dividend, etc. And it depends on human sentiment. What will other people like you think about this investment? So let's discuss now what is good investing, and let's go to our YouTube portfolio, subscribe to follow this, where we have a lot of stocks. And if I need to choose one from here, which is a good long-term inflation protection investment, pause your video now and let's see if you could choose one from these that will be in line with my selection. Did you select one? Okay, write it down. Don't cheat. And my selection is Google, because let me show you how a business works when it comes to inflation. Google is now at 90 as I am filming this on a Sunday late evening. The P ratio is 18 and market cap 1.1 trillion. So what is good investing? Good investing is high uncertainty and low risk. And let's apply that to Google. Maybe revenues and net income will go a little bit lower. So let's say it will be flat for 2-3 years. The market hates that. The market hates that it will be flat, that it could be flat, and that's exactly the reason why it is down from 150, because the market hates uncertainty. The market hates that it doesn't know whether Google will grow 5% or 15% per year long term. Maybe it will be 10%. The market doesn't know. As said, the market hates uncertainty and hates the fact that they don't know when will Google go back to growth, because it depends on shorter term macro and advertisement costs, etc. And then the biggest fear of the market, will the stock go down even lower, and nobody wants to buy a stock that goes down, so there is more pressure on selling, and therefore the same stock that everyone was buying when it was going up, now people are selling and scared. But let's go to investing. If we divide 100 with the P ratio, we get an earnings yield of 5.38%. Let's take the worst case scenario and that Google grows just 5% per year. That gives us a return of 10%. Now Google is a very strong business, and if there is inflation, they can increase their prices, their costs don't go that high, and you have a great return there over the long term. The problem is that you have to accept the potential that it might go even lower, when you have to be ready to buy more. That's simply it. When it comes to this, over the long term, if you are ready to buy more, it will average out pretty well for you, because this is a strong business. You are using it now by watching this. Thanks for that. And it has great margins. If we go to our overview of data here, ticker, please use the link in the description below if you want these long-term financial statements where you can look for years in the back. And the most important thing here is that Google has great gross margins, 60%. Despite their huge investments and everything, they have still great operating margins, and most importantly, great 20% net profit margins, which means that there is power to pricing, power to anything. As Warren Buffett said, when you want to invest for inflation, invest in the best business out there. So from our YouTube portfolio, this really looks like a good business to invest. Others have other situations, but good businesses at a fair price is a way to protect yourself from inflation. I'll still do the 10 asset classes like we did last year for 2023, so subscribe for that, and I'll see you in the next video.